On today's episode of the Cryptoverse, here are my top 6 crypto news stories of the day. And also remember, if you would like to get paid in crypto for watching my videos, then make sure you visit thecryptoverse.show. Click on this big blue button at the top that says get paid to watch. That'll take you over to a 2-minute video that explains exactly how that works. And yesterday, I'm still averaging around $1 to each person that participates in this scheme, so check it out. Let's get into the news, shall we? Another day, another stablecoin, except this time it's the Japanese yen. So I'm going to head over to Forex Street, it's fxstreet.com, for this article. It says Japanese internet giant GMO will issue JPY, which is Japanese yen, pegged stablecoin for circulation in the Asian market. So this is issued by Japanese giant GMO. They will create the GJY. So normally it's JPY, Japanese yen, but this is going to be the GMO Japanese yen, the GJY. And they're going to use it to service the remittance market in the first instance. Now, this is an obvious use case for stablecoins, but not one I've really thought very much about. But it makes sense, doesn't it? I mean, think about it. If I'm in the UK, I could just buy this Japanese yen stablecoin from the UK on GMO's exchange, say, and then just send that cryptocurrency to my friend in Japan. That's it. End of story. The next thing I saw in my mind's eye was a future in which a proportion, let's say half of the world's Forex market, ends up being comprised of stable coins in the crypto world that are traded against each other. So it only takes one exchange to create, say, a trading pair where the Gemini dollar starts trading against this Japanese yen stablecoin, and we have the beginnings of a crypto Forex market. That's a mind-blowing idea. So there's also a sign of a stablecoin for the British pound on the horizon. So this looks like the trend for 2019. Stablecoins for everybody. And when I say another day, another stablecoin, check this next story out. PricewaterhouseCoopers is developing a new dollar-pegged stablecoin. This comes from SlugFeed. PwC is developing a dollar-pegged stablecoin with cred. Now, that's a play on words. It means cred as in credibility because PwC is one of the top 4 accounting firms in the world, but it's also in partnership with this project called Cred, which is LBA, which used to be Libra Credits, right? So that's the play on words. I don't think we need to analyze this story. I'm just pointing out how stablecoins really do seem to be the hot topic right now. Next story. In a bold move, Forbes have decided to partner with Civil to begin publishing their journalistic content on the Ethereum blockchain. So I got this from Civil's own Medium blog. Here it is. Forbes and Civil, a major milestone for blockchain-based journalism. So I had a good look at this Civil thing. So with Civil, token holders get to vote on who's allowed to publish on the platform. The idea being that people who control the platform control the journalism, or rather that people should control journalism and not the massive gatekeeper corporations who are bought and paid for by special interests, who want to propagandize the public. So Civil here, they even have a constitution which ensures that any of the newsrooms that publish on the platform, they adhere to agreed upon set of journalistic standards. Now, no such standards exist in traditional journalism. They sort of do in an informal sense, but not any that are in consensus and none that can be verified that the publishers are actually following. So to be clear, Forbes also have to agree to this constitution in order to publish. So that's a big step of humility if you ask me. I would not expect such a large media company to do such a thing. But I guess one of these big media companies has to break ranks first, most likely the one with the biggest conscience, I would suggest. So Forbes are going to go start in the first quarter of 2019 by publishing to this Civil platform, and then they're going to start doing it from their cryptocurrency news desk, which is a good place to start. The Medium post also claims that Forbes will then consider publishing all of its content on this decentralized news network within the next 12 months. A, that's pretty gobsmacking, and B, I hope all those people who say that there is yet to be any real use case for blockchain technology are watching this episode and investigate this project. Next story. Singapore, regulators plan to smooth over banking ties with crypto businesses. So this is an article from the Cointelegraph. Here it is, by William Suberg. Again, I've not picked this story out with the intention of analysing its contents, but more it gives me an excuse to share some insights about what was triggered when I read this article. Question: why do we even have this problem with banks closing accounts of crypto companies? Well, it's principally because these crypto companies still have to deal with fiat currencies in order to trade with non-crypto businesses. You have to pay bills, you have to pay employees, electricity bills, all that sort of stuff. And traditionally, those companies don't accept crypto directly. Now, historically, I would agree. However, if the trend towards stablecoins is anything to go by, we have a real chance of eliminating the crypto banking problem altogether. So specifically what I mean by that is that stablecoins could mean there is a much higher chance of crypto businesses operating completely outside the old banking system. So instead of having to have a fiat bank account and all of the problems that have been coming with that, they can begin to pay in crypto stablecoins so that the recipient doesn't have to worry about the volatility risk that causes them not to want to accept crypto payment in the first place. So let me know what you think to that in the comments below. Next story. Poloniex adds an on-ramp for fiat currencies as Circle launches something called Circle Research. So this was reported by Bits Online. Poloniex adds fiat on-ramp as Circle launches Circle Research. So when I zoom out a bit and I look at Circle's business strategy, I can see what they're building. So they acquired this company Seed Invest, which is an equity crowdfunding platform. They have launched the Circle Dollar Stablecoin, yet another one, the USDC, Circle Dollar, and they also now own the Poloniex cryptocurrency exchange. So with those three components, they have an ecosystem of their own, right? Number one, people launch crowdfunding campaigns on the Seed Invest website. Number two, those crowdfunding campaigns can raise money and measure it in the Circle Dollar. So you would actually pledge Circle dollars to the crowdfund in order to hit a hard cap of say $20 million. And then number three, the tokens that you buy in the crowdfund can then be traded on Poloniex. And that all happens within the Circle ecosystem. And it's much easier for the investor, right? I hold 1,000 Circle dollars. I pledge the 1,000 Circle dollars straight to the project on Seed Invest. And then I can then sell those tokens if I want on Poloniex back into Circle dollars, all with the stability of a stablecoin. And it also means that the benefit of doing an ICO by taking payment in that stablecoin is it makes it easier to measure your return, right? But it also removes one side of the volatility. For example, if you buy an ICO on Ethereum or using Ethereum as the currency, on one hand, you've got Ether fluctuating in value, as well as the token you bought fluctuating in value, making it a royal nightmare. So by stabilizing one side of that equation with a stablecoin, the token can move around in value, but at least it'll be measured in, Circle dollars. Next story. The first major Bitcoin Cash ICO raised $30 million in record time. 2.2 hours it was. So I really thought this one was worth talking about. Who else would report this than Bitcoin.com? So here it is. First major Bitcoin Cash ICO raises 30 million in record time. So I've got a few things to say about this. So the project is a tokenized mining pool, but that's not the most interesting thing about this. I'm more interested in this being the first ICO on Bitcoin Cash. So it says here, like I said, that the $30 million was raised in 2.2 hours. What confused me though is that I looked back over 4 days of Bitcoin Cash network data, and I wasn't able to see any notable spike in Bitcoin Cash transactions that coincided with this story. So the article says that the ICO happened on Monday. So going back 4 days should have been enough to see some bigger blocks suddenly appear within that 2-hour period, but I wasn't really able to find any. So this ICO was possible thanks to something called the Wormhole protocol that allows tokens to be created on the Bitcoin Cash blockchain. Many of us remember this from the early days as being called colored coins, right? So this wormhole, it's an adaptation of the Omni protocol, which was originally developed a few years back actually, to allow tokens to be built on Bitcoin, on the BTC network as these colored coins. It hasn't really taken off, mainly due to Bitcoin's network capacity and fees. Bitcoin Cash has plenty of capacity though, on-chain capacity, to handle these token transactions. So I'm not surprised that someone's taken the Omni protocol and developed it for Bitcoin Cash. That was only a matter of time. So it is worth noting though that Tether continues to use the Omni layer protocol on the Bitcoin network. Now I would say that's probably expensive in terms of transaction fees. However, Tether doesn't really move around much, does it? People typically keep their Tether on the exchange and then trade back and forth into various cryptocurrencies, which are all off-chain transactions. It only matters if you're moving Tether between exchanges or if you're moving it back to Tether's wallet to redeem the actual US dollar fiat. So basically this is good news for Bitcoin Cash, and I'm glad to see some actual experimentation going on, and showing what can be done with big blocks rather than the yada yada of, conference bravado and trolling on Reddit. Like, get on with it, prove it, and that seems to be what they're doing. But that's all I've got for you today, so please like, share and subscribe and comment down below. And remember, if you want to earn cryptocurrency for watching the show, head over to my website, thecryptoverse.show, click on this big blue button that says get paid to watch the explainer video, which will explain exactly how that works. And as you can see, I'm averaging about $1 per person that contributes to this scheme. Other than that, I'll be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.